Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
King dollar marches higher. President-elect Trump demands BRICS commitment on using the dollar. Euro under pressure. France's far-right party threatens to sink the government amid budget concerns. And Stellantis craters as CEO Carlos Tavares quits early. Meanwhile, Tesla ramps up discounts in China. Good morning, Menace. Great to be back with you.
Good to have you back alongside me, Danny. Here we go. We're starting on the back foot. You went away with a spirited week last week, with the best week of the month, up 5.7. Sorry, the best month of 2024, I should say. And November was up just under 6%. But we start on the back foot this morning. By the way, small caps were the only people that didn't manage to make a new all-time high last week, even though $141 billion of money flew into U.S. equities. The best 4 weeks on record. Roll it over, have a look at the bonds. We step back this morning, so up 4 basis points on the 10s. We both checked this morning. Last week, we dropped by 23 basis points. And Julian Emmanuel at Evercore says, apparently the bond vigilantes, apparently they've gone on holidays. They've gone home for their holidays. We'll take a snapshot of the euro. This is the euro under pressure. French budget woes really are in focus. Will Marine Le Pen topple the government? The National Rally President Bardella said he'll sink the French government unless there's a miracle deal in terms of what's going on with the budget.
So here we are, France's bonds basically trading like Greece, which is apparently the ultimate insult for Europe. Chinese bonds are below that of Japan. Up is down, down is up. All of this world order is shifting, Menace, even before we have a Trump presidency and really understand the full thrust of what tariffs might mean.
And I think an example of that is you've got Justin Trudeau flying down to Mar-a-Lago over the weekend. You've got a message from Trump to the BRICS nations. What is this? It's about weakening the coalition. Perhaps it's about Tina. There is no alternative to the dollar. I want allegiance and I want near fealty to the dollar. What does that do to strong dollar, weak dollar policy?
And we were both talking about Peter Scheer this morning over the weekend, saying that the market consensus has shifted to just assuming that this is an opening salvo. For Peter Scheer, that concerns him. I mean, anytime there's a big consensus in the market, fair to say that that concerns a few people. Yeah,
well, you got to say when Trudeau gets on a plane, flies down to Mar-a-Lago, it's smart chess piece moves to sort of be on side with President-elect. But one message came from President-elect Donald Trump over the weekend. It was this warning to the BRICS nations in case they were still considering uniting around an alternative currency to the ubiquitous U.S. dollar. He posted on Truth Social over the weekend this: they will face 100% tariffs and should expect to say goodbye to selling into the wonderful U.S. economy. Valentin Marinov is the head of FX strategy at Credit Agricole. He joins us now. So, look, Valentin, good to have you with us. The dollar is bid this morning for multiple reasons. I want to get your take on this. Is this message from Donald Trump to the BRICS about destabilizing that alliance, or really affirming to the world, I want fealty to the U.S. dollar?
Well, I guess you could perhaps really ask Trump to maybe explain, or President-elect Trump, for an explanation about that. But I guess my own interpretation of the remarks certainly highlight that Trump does want to have his cake and eat it too. Certainly, President-elect Trump would like the U.S. economy to be trading less with the rest of the world, therefore running less of a trade deficit. And equally, he also wants the rest of the world to continue to use the dollar as if nothing has happened. And I think one of the two things is, actually, they're quite incompatible. So one of the two things have to give over the longer term. Our best guess is that as Trump and his administration continue to try to reduce the trade of the world with the U.S., as they're trying to reduce the U.S. trade deficit, one of the consequences of that would be weaker dollar down the road. As a matter of fact, a weak dollar may be part of the solution if you want to reduce the U.S. Trade deficit. On the day, however, the comments are seen as potentially suggesting that Trump is a strong dollar politician who would be ultimately resisting any calls for currency weakness. To me, it's just adding to the overall inconsistency of the policies that the Trump administration will be pursuing next year. And clearly, to your point in your question, certainly encouraging other economies not to abandon the dollar just yet.
Valentin, how do you understand, though, whether this, as the market is interpreted, that Menace and I discussed, that Peter Scheer is saying, that it's an opening salvo? How do you understand that versus, the first move of the chess gambit versus believe Trump, he means what he says, and trade accordingly?
Well, I think Donald Trump is fully aware that really part of his policies, at least, is quite inconsistent. But it is the case that if he does want to reduce U.S. trade deficit at a time where he also wants to pursue a policy of aggressive fiscal stimulus, the administration has to make sure that the funding conditions for the U.S. from here are likely or should remain favorable. And a big part of that, indeed, is a stable, potentially stronger dollar. And I guess this is what the long game is for the Trump administration from here. Really try to pursue a protectionist, really even mercantilist policies, while at the same time keep the dollar stable and potentially even allow slight appreciation there. So the game has just started, and I guess next year would be the time and place where we're really going to experience more of the same. But once again, I think the lack of compatibility between those two objectives could ultimately claim a victim, and that victim may indeed be the dollar itself.
Well, how do you play defense next year? If we're going into 2025, it looks like a number of central banks are going to have to be on the defense. Ground zero for currency wars 2025 is dollar yuan.
Yes, indeed. And I think that that is one of the key, really focal points, if you wish, for many investors. And I guess for quite a few clients, been discussing that with 2018 is a useful template when it comes to the impact of the Trump's policy mix on the broader economy and I guess the broader FX markets. Back then, as investors like to highlight, dollar renminbi went from 620 to 720, almost 15, 20%. Really depreciation for the currency. We think, however, this time around there is far less appetite for yuan weakness, at least from the point of view of the Chinese officials. It is the case that 750 is a psychological level which, if broken, could fuel financial stability concerns, and those considerations could actually mean that the PBOC, while a participant in a currency war of sorts next year, would be quite reluctant really to really participate in full. So therefore, we think that yes, the dollar may be slightly weaker from here, slightly stronger from here, but no repeat of the 2018 rally.
Perhaps where ground zero then ends up being, Valentin, is the euro. It's not just Trump tariffs. It's an auto industry that's on its knees. It's political discord in France. What do you do with the euro? Can you buy it at any point? Is it parity and inevitability at this moment?
Well, I would like to think not, but impossible is nothing, as they say. The point is that it's a perfect storm for the euro at the moment on the economic, political, geopolitical front, and quite a few of our clients are quite bearish. You mentioned parity, and it's really the rallying cry of all the euro bears out there. They will not want rest until we get to that. It is the case, however, that my personal view would be that a lot of negatives are already in the price. However you look at it, really on the political, geopolitical and economic side, really it does suggest that some, if not all, of the negatives are already in it. So from that point of view, where it does remain a sort of a pressure valve for all the investor fears out there, I would be cautious in extrapolating the recent losses really from current levels. I mean, you mentioned France and the French political developments at the beginning. It is the case that they will actually matter for the euro when they start to matter for the ECB, when the French political uncertainty starts to weigh on the outlook in a meaningful way, and indeed it feels contagion to the rest of the EGB markets. So far, there seems to be fairly little evidence of any of that. So from that point of view, we also remain, we think that the ECB will disappoint the dovish market expectations that are in the market. And as a result, again, once again, I do struggle to see euro trend on a trend depreciation from current levels targeting parity.
Yeah, at the moment, euro at 105. Valentin, great to catch up with you this morning. Valentin Marinov of Credit Agricole, thank you so much. Let's get to some of the other top stories trending on the terminal this morning. The Biden administration unveiled new restrictions on China's access to vital components for chips and AI. That all escalates a campaign to contain Beijing's technological ambitions. The U.S. announced 140 more Chinese entities that it accused of acting on Beijing's behalf, blacklisting them, though it didn't name them in an initial statement.
Well, the EV makers, including Tesla and BYD, are offering discounts and incentives in China. This is to meet their annual sales targets. Tesla is offering a 5-year 0% loan and a 10,000 yuan, that's $1,380 discount on its Model Y. And BYD is offering 1,000 yuan to 3,000 yuan off the same models.
BlackRock is nearing a deal to buy private credit manager HPS, beefing up its alternative asset offering. An agreement could be announced as early as the coming week. It would value HPS at $12 billion or more. BlackRock will pay for HPS with a mix of cash and stock, all of that according to people with knowledge of the matter.
Coming up on the show, French government on the edge. We'll bring you the very latest on the political turmoil from Paris.
And BlackRock's Amanda Lynam will join us later in the program as credit spreads still grind to record tights. All of that to come on your brief this morning.
It's Bloomberg Brief. We're back together again. Danny Berger and myself, Manus Cranny in New York. Pressure on the French assets this morning. The euro's dropping. The president of France's far-right National Rally has vowed to sink the French government unless there is a miracle budget for next year. Now, that pledge comes as the country's finance minister told Bloomberg he refuses to accept Marine Le Pen's demands for budget changes.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Let's get a little bit more from our very own Caroline Conan in Paris. Caroline, good to see you. So this impasse, Marine Le Pen, she is the queen maker, to say the very least. What scale of miracle needs to happen to close the gap between her and Barnier?
More concessions from the government on the social security budget, more concessions on pensions. She wants pensions to be raised for everyone as soon as January. More concessions on drug reimbursement. She wants Barnier to abandon this plan he had in his budget to reduce the reimbursement for some medicine. Clearly, you heard from the finance minister, my exclusive interview with Antoine Armand yesterday in Paris. The government is not exactly ready to make additional concessions because they've already done some on prices of electricity, for example. And all these concessions they've already made is already costing the French budget as much as 10 billion euros out of the 60 billion euros they had planned of savings for next year. So the National Rally of Marine Le Pen has given Barnier's government until 2 p.m. UK, 3 p.m. French time, 9 a.m. New York time today as a deadline to say whether she will or not support a possible vote of no confidence that could possibly make the French government collapse as soon as this week.
But no government official wants to be the one that invokes the ire of this bond market, where, of course, brought back to memories of Liz Truss. And Le Pen risks being that person by forcing this no confidence vote. So what are the thresholds that we need to keep mind of to see what could ignite the ire of the bond vigilantes?
That's right. And in fact, what Marine Le Pen really wants is for the government to actually say that they respect the far-right electorate, these 11 million French people who voted for the National Rally in the last elections, and that they have made some concessions thanks to the National Rally. But obviously, politically, that is not something that the Prime Minister Michel Barnier can say. So we'll see how this pans out this afternoon, whether we actually have a vote of no confidence in the next few days. If it doesn't happen this week, then there is another deadline, which is the week before Christmas, where Michel Barnier has to pass the overall budget bill and potentially face another vote of no confidence by December 20.
Caroline, thanks so much for joining us in a really fantastic interview over the weekend with the finance minister, Bloomberg's Caroline Conan. Let's stay in Europe because Stellantis shares dropping by more than 8% in Italy this morning. The CEO, Carlos Tavares, has stepped down after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump, which, again, continues this morning. Bloomberg's Oliver Crook joins us from Berlin. Oliver, the auto industry in Europe, it's not just Stellantis. It is a problem for the country as a whole. So when we look at the CEO stepping down, how much of this is a Stellantis problem versus an industry problem?
Yeah, so Danny, we really have everything here on the menu for what's going on here at Stellantis. There is, of course, a industry-wide issue that is basically no one is spared from, whether it's in the United States, but particularly within Europe. And then you have some Stellantis-specific issues. And listen, we went pretty quickly at Stellantis from unanimous support of the board to basically creative strategic differences between the board and the CEO, which ultimately led to his resignation pretty abruptly yesterday. This was not a total shock in the sense that there's been a sense that sort of Stellantis has been staggering forward ever since that profit warning back in September, really trying to right the ship. At the time, there were discussions of potentially that Tavares might not make it, but he quickly got rid of the CFO, he got rid of the COO, got rid of the brand heads at Maserati and Alfa Romeo, really to try to stem that conversation. But that has obviously come to a head. I think that for the analyst community and for traders today, there is a question as to why you have to do this right now when you already had a CEO on the way out. Could you have waited a little bit longer for this to be a slightly tidier transition? And also the fact that we can't ignore that investors also kind of like Carlos Tavares because he was very, very strict on cost cuts. He was really cutting costs to the bone. You talk to other people in the industry, other executives, they were sort of in awe about how much he was able to cut costs over at Stellantis, though, of course, his critics would say that that went sort of too far, and as a consequence, you had quality issues, and you saw that really represented in the main issue for Stellantis, where sort of Germany has a China problem, Stellantis had a U.S. problem. They had about 12% of market share in the U.S. market at the beginning of last year. They've fallen down to about 8%. The next CEO needs to deal with that.
Well, it's certainly taken a tumble this morning. I mean, the U.S. car dealers accused them of being reckless in their short-term decision-making. That's part of the argument with Carlos Tavares, is that great cost cutter, but did he have the major plan for the future? Oliver, thank you very much. Oliver Crook in Berlin on the latest on the auto industry in Europe. Coming up, Hunter is off the hook. President Biden pardons his son after previously stating he would not use his executive powers to aid his family. More on the story right here on Bloomberg Brief.
It's your Bloomberg Brief. Danny Berger and Manus Cranny together in New York. So President Biden has announced that he is pardoning his son Hunter after previously saying that he wouldn't use his executive powers to help him. The president wrote in a statement, quote, "I believe in the justice system, but as I have wrestled with this, I also believe raw politics has infected this process and it led to a miscarriage of justice." Joining us now is Bloomberg's Kevin Whitelaw. Kevin, it's usually a complaint you hear from Donald Trump that the Justice Department has been infected with politics. What does this turn mean to have President Biden pardoning his son, by the way, which is an incredibly sweeping pardon, and using the same justification?
Well, that's right. I mean, I think it has a lot of Democrats worried that it's going to make it that much harder for them to try to, keep the guardrails on a second Trump presidency. And indeed, it does sort of get to the idea that that you've heard from not just Trump, but a lot of the people around him, and including some of the folks he's naming to sensitive positions, that the Justice Department had been sort of weaponized in various ways. The irony, of course, here is it was Biden's own Justice Department prosecuting his son, which actually showed that there was up to now really some separation between the White House and the Justice Department in the traditional way that has been the case for a number of years in the United States. It's also very clear that Donald Trump has suggested that he wants to change that. He wants the Justice Department to serve the political aims and perhaps even go after some of Trump's own enemies. And that's where I think you had President Biden say that he had decided that he had to make a decision that he originally had ruled out.
Well, the breadth of this can't be underestimated. I think in Politico they said they haven't seen a breadth of pardon like this since they saw in the wording of Nixon, and that was in 1974. Over the weekend, we saw Justin Trudeau get on a plane, come to Mar-a-Lago. I mean, this is a very big shift in terms of how to deal with your neighbor before he even sits in the White House. How much was discussed around tariffs, or what was the commitment that Trudeau has made perhaps to ward off the worst case scenario? This is about border patrol, isn't it?
Yeah, I mean, look, Donald Trump is trying to see whatever he can get and whatever kind of negotiation he has. And so, the Canadian Prime Minister went and basically did his best to try to say, hey, we're not part of the problem. We're going to do what you want. We're going to make sure that we're taking on the border more. It's not really clear that what's actually going to change, But a lot of this is for, Trump being seen already making a difference. And so you already have an effect that the transition to the next administration is sort of accelerated because, Trump's already, having these state meetings, having these, sort of negotiations and claiming successes. He's done that with after a conversation with the Mexican president. He's essentially doing that as well with the Canadians.
Okay. Thank you so much, Kevin, for being with us. Summing the political machinations of the weekend, Kevin Whitelaw. A quick snapshot on currency. We know the euro is under pressure. We just had a conversation, Danny, with Valentin Marinov going, don't be just so dour on this because he sees a lack of contagion into the rest of the market. But it certainly looks like Marine Le Pen is the queen maker in Paris. She can choose whether to sink this government. But as you rightly said, does she really want to be famed as being the Liz Truss of France? If she calls that no confidence vote and goes through with it, that is like a sword of Damocles across politics.
Yeah, no politician wants to be that. Euro at 105 this morning. Again, Valentin saying that all the bad news is maybe already priced in. Coming up, we're going to catch up with BlackRock's Amanda Lynam. Talk a bit of Europe with her, too. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
King dollar marches higher. President-elect Trump demands BRICS commitment on using the dollar. Euro under pressure. France's far-right party threatens to sink the government amid budget concerns. And Stellantis craters as the CEO Carlos Tavares quits early. Meanwhile, Tesla ramps up the discounts in China. Danny, good morning. Welcome back.
Thank you, Manus. The Thanksgiving break is over. You're greeted by equities selling off in the futures market. Russell 2000 unchanged, but both S&P and NASDAQ down 0.2%. That comes off the back of the strongest U.S. monthly performance of 2024, ending the week with another record high. For this bond market, it is a busy week. You get appearances from Powell, Lagarde, capped off by Jobs Day on Friday. Yields go higher by 4 basis points across the curve. The euro, meanwhile, falls, weakens by 0.6%. We're at 105, kneecapped by not just economic and auto issues, Manus, but also this morning, the latest drama playing out in France. The prime minister threatened with a no confidence vote by opposition lawmakers over the budget.
Yeah, and I think the point that you've made this morning, which is, does Marine Le Pen, she may be the queen maker in terms of politics and fiscal probity in France at the moment, but does she really want to be the one that brings down the government and blows out German-French spreads beyond where they were in 2012? In 2012, it was Mario Draghi who?
Yeah, it was his whatever it takes moment. Yeah. It's remarkable that we've come all the way back to that, and that France at the moment is contending with yields that look like Greece's. I mean, this is the ultimate insult for Europe, right? And so we're in this situation where there's concerns about European weakness. BlackRock's Amanda Lynam weighs in writing this. Elevated trade policy uncertainty has the potential to weigh on investment in the euro area, but the relatively resilient performance of euro credit, corporate credit rather, has not reflected a weaker euro area growth backdrop. Amanda joins us now. She's the head of macro credit research at BlackRock. I mean, Amanda, it's like the storm of all storms for Europe. You have trade concerns, which you point out. You also have the economic weakness. You now have more political discord in France. At what point, if at any point, does this impact the corporate credit market?
Good morning. Thank you for having me. It's so interesting. The growth divergence, the political uncertainty, that has existed in Europe for a while. I think what's really, I think, important to watch is that just the idea of trade uncertainty, not necessarily implementation of trade tariffs, has the potential to weigh on euro area investment. There are a few things, though, that are keeping European credit holding in rather well. I would say, as you noted at the start, European credit hasn't underperformed the U.S., and within European credit, high yield has outperformed IG. So the European credit market is not sending you a signal that it is concerned about growth. We have a different rating skew within European high yield, a bit higher quality. It's a smaller market, so not a ton of bonds to go around. That's a technical tailwind. And then I think what's probably not discussed enough, but is still a very important consideration, the European Central Bank still owns a large chunk of the European IG market, even though the corporate securities purchase program has ended, and even though investments have ended, they still own a fair amount of stock of bonds. And so what that is doing is that it's providing some technical support to the European credit market and possibly incentivizing investors to move down in quality, even though the ECB holds IG credit.
Well, then the Achilles heel in this, I mean, if you add insult to injury, if it's political woe it's spread woe. You then have potential tariff woe to come. Now, you talk about that impact in the US, and we'll talk about that in a moment. But the tariff impact, the risk of tariff, how does that have a longer-lasting impact in European credit?
President Lagarde had noted that the European area is an open economy, so trade is obviously very important. They're very focused on downside risks to trade uncertainty. There are certain sectors that we're watching very closely. Autos is among them. This is part of the reason, actually, that we like financials. We like it in the European market and in the U.S. market because it's a services-based industry, not sending a widget across international waters. Now, there are certain political headwinds that are weighing on French banks, for example, overnight this morning in terms of the price action in the equity market. But in general, we like financials as a sector. To your point, Manus, I think it's just really important to do the granular bottom-up credit selection because actually when you look at what a lot of these companies are saying, depending on where their supply chains are, how they're sourcing products, what sort of resilience they've built in over the past several years, for example, it actually is very much a credit picker's market as opposed to a sector play.
Do you see that happening now of investors looking at supply chain exposure and maybe shunning certain parts of this credit market?
For sure, and you actually see it coming out of the earnings. So the earnings that have been announced specifically from the retail sector over the past few weeks, actually companies are talking about the steps that they've taken over the past several years to shore up their supply chains, build some resilience. And instead of supply chain efficiency, it seems like the focus has been over the past few years, even with the pandemic, supply chain resilience. And so maybe paying up a little bit more to build that resilience into the supply chain. I think the pandemic shined a light in a lot of areas of kind of open gaps in supply chains that became problematic when the economy experienced a sudden shock.
Let's just pivot to the US, Amanda, because the one thing that you say is underpriced is the risk of boomerang tariffs from the rest of the world. You see Canada, you see Trudeau in Mar-a-Lago over the weekend, you see Sheinbaum on the phone with him last week. So there is a longer tail for credit in regards to the risk from boomerang tariffs from elsewhere in the world.
That's right. The worst case outcome for corporate credit is a scenario where you have across the board tariffs coupled with retaliation such that the tariff is no longer a one-time price level shock, but has the potential to kind of feed upon itself, especially if it's coupled with labor shortages, for example, that are pushing wage costs higher. And I think that second round effect becomes somewhat problematic in that scenario for two reasons. One is it may change the path of forward monetary policy. The second is there would be, in that case, a risk that corporates start to use layoffs to protect their margins. And think about where we are in the U.S. right now. Corporates haven't been really laying off workers to that large extent. You've seen the layoff rate remain pretty low. That's helped keep the consumer really strong, and the consumer generates 2/3 of U.S. GDP. So if you do have weakness in the corporate market such that they're focusing on layoffs, that has the potential to allow that weakness that is right now contained to the low-income consumer in the U.S. to spread more broadly. And I think that's really where we become concerned at the macro level.
How do you understand how quickly that could happen?
I think really paying attention to the company level commentary is going to be really critical. Right now, companies are telling you that they actually don't have a lot of clarity on the go forward. I think that's fair, right? But I do think similar to the pandemic, when the companies were talking about their expectations for supply chain normalization, it was actually much longer than what the market was baking in. So I think we can look to micro level commentary over the next few quarters to give us a gauge on how close corporates are to flexing that layoff tool if they need to protect their margins. That will really be critical, again, because we need to keep the U.S. consumer in aggregate resilient in order to contribute to the resilience of the overall economy. And going back to corporate spreads, which is where we began, really it's been growth, and especially in the U.S., that has allowed credit spreads to reach new cycle tights over the past few weeks. And that will be critical going forward in the U.S. market. In Europe, it's a little bit different. As you know, that growth backdrop is a bit weaker.
What impact, I mean, Scott Besant, 1 week ago, we had this sort of Besant bounce. Danny was on vacation. We had the Besant bounce. The bond market rallied, and there was a nice trickle-down effect. We saw this euphoria within credit, one could say. But if you look at his promises, 3% deficit, a deficit of 3% growth via deregulation, and 3 million barrels, or the equivalent thereof, in energy. Again, what is the trickle-down effect of that into credit? Because that gives you a very, very different U.S. economic landscape.
3% growth would be welcomed by credit. That would be an above-trend pace of growth, and that would be something that the credit market, I think, would view favorably because it would allow corporate credit to navigate structurally higher interest rates. Even though we see some scope for the Fed to cut in December, we're expecting a landing zone or a terminal rate that is above where we've been over the past 15 years. And so structurally higher rates coupled with above-trend growth is a recipe that corporate credit can digest. I think in terms of lowering the deficit, that would also be welcomed by the bond market. One of the risks to corporate credit is a disorderly sell-off in Treasury yields, as we've been saying.
Well, let's see what Doge and let's see what Besant actually manages to produce. Amanda, always great to get your take.
Thanks for having me.
Good to see you. That is Amanda Lynam there of BlackRock on the markets. Coming up, Stellantis shares under pressure, to say the least. The CEO's surprise resignation. More on the auto sector coming up on Bloomberg Brief. Good morning from New York. It is Bloomberg Brief. I'm Manish Krenny in New York alongside Danny Berger. President Biden has pardoned his son, Hunter Biden. This after previously saying he would not use the executive powers to do so. And the president wrote this: "I believe in the justice system, but I have wrestled with this. I also believe raw politics has been infected by this process, and it has led to a miscarriage of justice." Kevin Whitelaw is with us. Kevin, good morning to you. So this is a significant U-turn by Biden. It is the breadth of the pardon that is perhaps most in question this morning. Politico saying this is the broadest pardon that they've seen since Nixon was pardoned in the 70s.
Yeah, I mean, it's the breadth of the pardon, but it's also just the fact that obviously Biden had spent months saying he wasn't going to do this, that he was going to trust in the justice system. And now he's obviously changed his mind. And I think a lot of that is looking at the incoming Trump administration, the kind of people that are being appointed or nominated for key positions, the sort of loyalists, a number of whom have made it very clear that they want to use the machinery of government to go after their political enemies and go after people that they think wronged them. And so, you know, you already have an administration, an incoming administration that's talked about what they see as the politicization of the Justice Department. They feel it was unfairly turned against Donald Trump. Here you have the sitting president also saying he felt that things got politicized. Ultimately, the concern, I think, from a lot of people is all of this is doing damage to the institution of just sort of law enforcement and the justice system and what are supposed to be career prosecutors who are independent from politics. That seems to be eroding very quickly.
Kevin, are you referring in any way to the FBI pick that we just got in Kash Patel, someone who had been critical of the plea deal that was reached with Hunter Biden?
Yeah, I think you look at that. I think you even look at the aborted effort to appoint Matt Gaetz as Attorney General. But these are folks who have talked about using the weaponry, using the machinery of government as a weapon, and have talked about wanting to go after people that they thought wronged Donald Trump or wronged Republicans. And so, you know, I think Biden looked at that and had to say that this was, you know, obviously just something that as a father, he was worried about sort of where his son was going to be left. Unfortunately, these Democrats, unfortunately for Democrats, that leaves them in the position of now trying to figure out how do you talk about these institutions, rule of law, what their traditional separation is supposed to be between politics and the legal proceedings. How are you supposed to talk about all of that in a Trump administration in the backdrop of a pardon like this one?
Well, John Bolton had a few scathing remarks. He compared the appointment to almost like Joseph Stalin's secret police, and that it should be rejected. Very quickly, Justin Trudeau came to Mar-a-Lago over the weekend. What did he promise Trump, president-elect, that he would deliver?
Well, you know, I think obviously he talked to the president about tightening border security, and then, you know, went back home and said that there's going to make some announcements about some significant enhancements, so what they called to the border. You know, I think this is just very much an effort of everybody to be seen responding to Donald Trump and what he wants, to give him the kind of symbolic victories that he's looking for. until we see the details, we're not going to really know what that means, as to how much is actually going to change. And it's really unclear how much that even matters to Donald Trump. How is he looking for actual things on the ground, or is he happy to take the win and to already, have this impression that's going on of how the administration has almost already begun, even though the inauguration is still quite a ways away.
Okay, Kevin, we appreciate that update. That is Bloomberg's Kevin Whitelaw. I want to get you a check on Stellantis shares this morning, down by 7% in the Italian trade. It is off the lows, but still under pressure. The CEO, Carlos Tavares, resigning after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump. Joining us now is Bloomberg's Oliver Crook. Oliver, this CEO had been someone who had thrown many things at the wall trying to reverse the fortune of Stellantis. What happened that he could no longer stay on board?
Yeah, and really someone that's been known to sort of turn around very difficult, complex companies. He's been CEO of Stellantis since basically Stellantis came into being back in 2021 with the merger of PSA, Peugeot, Citroën, and FCA, Fiat Chrysler. And he's been running the company, ever since, and has spent his entire career within this industry. He's really been known for sort of running a very, very tight ship in terms of costs. He was also paid a lot of money. People joke the kind of private equity approach to sort of running car companies. And many of the executives that even I spoke to in the German car industry, they were sort of in awe. They were a little bit incredulous as to how he was able to sort of cut costs all repeatedly. And, this is something that basically all of these companies are looking to do right now. There's perhaps also, Danny, a sense that he has pulled that lever. They shot the cost-cutting bullet, and that has been already sort of manifested around Stellantis. While these other car companies now still have that sort of dry powder of trying to bring those costs down, maybe they no longer have that over at Stellantis. What you also have for the other German car makers, you have the China problem. That is not what Stellantis has. What Stellantis now has is a U.S. problem. They had a huge bloated inventory. Part of the sort of criticism of Carlos Tavares was that he had cut too much, and that as a consequence, there was a lot of brand damage done to some of the key brands like Ram, like Jeep. And so you saw that in basically very bloated inventory over in the United States. And what the next CEO is going to have to deal with is looking at a picture where about a year and a half ago, you had about 12% of the U.S. Market share held by Stellantis. That has fallen down to about 8%. So these are some of the issues that are specific to Stellantis that are stacking up, and what has ultimately led to a CEO being, the disagreement maybe pushed out early when he was supposed to leave at the beginning of 2026.
Well, a lot of the European autos are grappling, Oliver, with what to do with their electric vehicle. This transition, and not just Stellantis, but you look at VW, and I'm looking at the history of strikes there. They're about to go on strike. The last major walkout they had was 2018 with 50,006 factories. Volkswagen have set fire to our collective agreements, is what IG Metall, the union, are saying. How quickly can this escalate into something much more colossal? This is about timing. Germany's under pressure, and Volkswagen workers are striking hard.
Absolutely, Madison. I'll pick up on a couple of those points. So what we should say is that these are basically tactical warning strikes. These are sort of the appetizer to the sort of full-blown UAW kind of strikes that we saw a year ago with the big three over in the United States and Michigan, right? This is just sort of tactical where they do sort of a couple hours here and there, but there are strikes across all the factory. And this is the workers saying, basically, this is what we're capable of. We can really bring a lot of issues for you over at the VW management board. What VW is trying to do is close up to 3 factories. We're talking about tens of thousands, potentially, of job cuts. They're talking about pay freezes for 2 years. They're talking about 10% pay cuts across the entire company. So this is what they're pushing up against. But as you say, Mattis, timing is everything. We are in the full-blown election campaign here in Germany. So you have this sort of tension between the corporate side and the workers, both of whom are going to try to be getting concessions out of the government as they're trying to get back in and go to this election being held in February.
Okay, Oliver, thank you very much. Tracking the story there, Oliver Crook in Berlin. Let's stick with the auto sector. Tesla and BYD, they're boosting their incentives and the discounts in China to help meet their annual sales targets before the year end. Tom McKenzie is tracking the story. We had a lot of promises that we were near the end of these incentives and the price cuts, and that things were good in China and they didn't need to dig in any harder. What's happened?
Oh, well, they're digging in, Manus, and certainly that Model Y Tesla that you've had your eye on, you might want to hot-foot it to Shanghai, because now you can get a 0% loan for 5 years, Manus, and a discount of $1,400 US. Look, it tells us, as you say, about the health or lack of health of that Chinese economy, but also about the competition within that market, because it's not just Tesla pushing through these discounts, but it's also the likes of BYD, and they are expecting to ship more than 4 million vehicles this year. In fact, just last month, they increased their sales in the single month by 70% from the previous year. BYD now have about a third in terms of the market share of shipments in that industry and ecosystem that is China. But you're also getting discounts coming through and those 0% loans coming through from the likes of Li Auto, Xiaomi as well. Interestingly, you were talking to Ollie about Stellantis, their partner in the Chinese market, Zhejiang. They've already come through with their own targets, beaten their targets for the year, 250,000. But it's a reminder of just how competitive this space is, the number of incumbents, but then the upstarts as well, and the challenge of cutting through in an economy that faces those broader challenges and broader headwinds.
Tom, while we have you, about 50 minutes ago, the U.S. announced more chip bans for China, this time on AI memory tools. What's different in this and what we've had before?
So you've got about 24 pieces of manufacturing kit that will now be restricted from the Chinese market, 3 pieces of software, and you have about 140 entities in China added to the blacklist. We'd had the lobbying from the likes of Lam Research, from the likes of Tokyo Electron over in Japan, from the likes of ASML in the Netherlands against the most severe form of these restrictions. They want to continue to have access to the market. The US administration, the Biden administration coming through with these details, further restrictions saying they want to ensure this technology, particularly with the focus on the build out of AI, does not enhance China's military capabilities and its ability, as the US would perceive it and characterize it, to crack down on human rights. So probably on the surface a little less severe than some of the restrictions that had been expected by some in the industry, but certainly a ramping up of the ability for this administration stateside to restrict access to some of these key materials and software in terms of the build out of AI for China.
Tom, appreciate it. That is Bloomberg's Tom McKenzie. Okay, coming up on the show, we're going to set you up for your trading day on this Monday. That's on your brief. It's your Bloomberg Brief. Danny Berger, Manus Cranny in New York. Let's set you up for your trading day today. ISM manufacturing data, that will come out at 10 a.m. Eastern. We're also going to hear from Fed Governor Chris Waller and New York Fed President John Williams, 3 p.m., 4:30 p.m. respectively. And President Biden is on his final overseas state visit. As a president, he'll be in Angola until Wednesday. Manus.
Danny, it is all about the, I suppose, fealty to the dollar. There is no alternative. That was the message to the BRICS. But euro dollar is on the back foot this morning, down by 0.5%. And the bottom line is, Christine Lagarde, will Marine Le Pen sink the French government? Does she really want to have that responsibility, possibly a no confidence vote, if she doesn't get what they want? National rally in terms of this fiscal argument in the budget.
A Freudian slip of who actually controls the euro at this point. Is it Le Pen or is it Lagarde?
Yeah, to be fair, it was actually Christine Lagarde and Ursula von der Leyen who urged checkbook diplomacy. Christine Lagarde last week said, get your checkbook out. If you're going to deal with Donald Trump, get on side with his tariffs. And we saw this over the weekend, didn't we?
But this is the thing. What do you focus on? Do you focus on the stutter tariffs or do you focus on Friday?